This is amazing. I'm actually starting something on time. This is good. All right. Okay, well, thanks everybody for coming. It's kind of strange doing a breakout from up here, but we'll see how this goes. And we also are like simulcasting this to, I think, 3/4 of North America, so just don't feel on the spot if you don't have good questions. So I'm Scott Wheeler. I will be moderating this panel, and our goal here is to really let as many of you get as many answers as possible about some of the options for funding startup and growth of impact businesses. So we have a very esteemed panel here. Panelists, I'm going to let each of you just give a quick introduction of who you are and what your organization is, and then we'll get going to questions. And then to tell you just a little bit about the format we're going to use here, I have a starting question for each of them. And then if you have questions, let me know. And if you don't, I have a second question for each of them. So John, why don't you get started?
Sure. Thank you, Scott. It's great to be here. It's good to see everybody. My name is John Moore. I am with Investor Circle, which is part of the American Sustainable Business Network. Investor Circle is an angel group, impact investors that are investing in startup companies and more frequently now in other types of investments that drive social and environmental impact. I'm also the executive chair of Impact BHL, which is located here in Philadelphia and is focused on accelerating the impact economy movement in Philadelphia.
Okay. Jerry? Yeah, you each have your own mics, so don't trade.
Sorry about that. I was sitting on the mic. Sorry about that. Hi, everyone. My name is Jamie Arroyo. I am the CEO of Assets. We're an economic justice organization and CDFI, also known as a community development financial institution based in Lancaster, Pennsylvania. Our focus is around entrepreneur training, community lending, and impact consulting for women and BIPOC entrepreneurs, really focusing on startups as well as established businesses, helping them scale, grow, and also improve their impact in the broader community.
Hey everybody, I'm Dr. Kimberly McLaughlin. I'm the founder and CEO of Grant Boulevard. Grant Boulevard is the first B Corp certified company in the fashion space that's Black owned. So that's one of our proud claims to fame. Beyond that, we're really interested in the intersection of thinking about how fashion can be used as a force to create workforce development opportunities for women who have some justice impacted, formerly incarcerated. So that's a major driver for how we think about the future of the fashion industry. And I think I've learned a lot about fundraising. I've had some success at that, and so I'm here to share what I've learned as a business owner about how to leverage your impact and the story of your impact to figure out how to grow some capacity.
Good afternoon, everyone. My name is Tanya Morris. I'm the president and founder of Mom Your Business. We support Black and brown female founders by connecting them to resources and opportunities that lead to success in business and in life. We offer a business accelerator program as well as a capital access and technical assistance program. So we are all about moving women of color businesses forward from where they are and scaling and growing those businesses by creating opportunities and connecting them to resources.
Hi, and I'm Jonathan Coleman. I lead the UnTours Foundation. UnTours Foundation owns UnTours, which is a travel company. It was the world's first ever certified B Corp, so that's a bit of our claim to fame. But since the 90s, 100% of the profits of UnTours travel have gone to UnTours Foundation. And a few years ago, when the founder passed away, he transferred ownership to the foundation. So now we own the travel company and we have the foundation. On the foundation side, we essentially act as impact investors, or in foundation speak, they call it mission-aligned investing. And we are one of the few foundations out there who have 100% of our assets all directly invested into companies that advance our mission. So we are looking to finance entrepreneurs who are at the front lines of fighting poverty, injustice, and the climate crisis.
All right. Thanks, everybody. And just so everybody knows who I am, again, I'm Scott Wheeler. I am the founder of Strategy Arts, also one of the very first B Corps, along with UnTours. I'm also a member of ASBN, and I'm an active angel investor with Investor Circle, focusing on impact businesses. So we're going to start from the lending space. So we'll start, Jamie, with you, and you can talk a little bit. So the first question I have is, we know that Assets is a CDFI and using the B assessment as a part of your loan program. Can you tell us a bit about that and the philosophy behind it?
Yeah, thank you. Yeah, a few years ago, I actually joined Assets as Director of Community Lending there, and my background was mostly in the banking space. In conversations with some of our impact consulting team, we always talked about that whenever we lended capital out to businesses, we only cared about whether or not they were going to pay us back. They're going to be profitable, can they cash flow? But what if a lending institution asked about how are you measuring your social and environmental performance, and whether or not you get access to capital is actually dependent on that and making improvements. So one of the things that we piloted was an impact loan. So we're actually a micro lender, so anywhere from $1,000 to $50,000. But any entrepreneur or small business that wanted to access anywhere between $10,000 and $50,000 were required to take the B impact assessment as part of the underwriting process of the loan. So this gave them, an initial score, and then they would work with our impact consulting team throughout their payback period to hit certain milestones and develop this improvement philosophy around their social and environmental performance. As they hit certain milestones, they would actually receive rate discounts on their interest rate on the loan. So this was an opportunity for us to use capital or finance as a force for good and a way to help incentivize businesses to say, yes, I'm profitable and I care about the people and the planet as well if I'm going to access capital with assets. So this impact loan, while still in the pilot phase, we're really excited about issuing a lot more in the coming year, but has really helped energize a lot of entrepreneurs to start thinking about their impact and be held accountable to it as well.
Great. Thanks, Jamie. Okay, Jonathan, the next question is for you, for the UnTours Foundation. So we know that the foundation makes grants, but they can also make investments out of their endowment. Can you explain that process and how businesses can best tap into those opportunities for funding?
Yeah, so the UnTours Foundation is quite unique in that we're not a grant-making institution as a foundation. We only do impact-focused investments. But most foundations have an endowment that sits in traditional investments, and they're required by law to allocate 5% of that towards their impact each year. But there's a growing movement of foundations to use more of that 95% of their assets to also help them advance their mission. And so many foundations are carving out portions of that fund to either invest in funds that are aligned with their values and mission, kind of into intermediaries that then do the direct investments, or make those direct investments themselves. And so there are a growing amount of opportunities to get impact-focused investment from foundations, even though entrepreneurs maybe don't think of that as the first place you would go. But it's a growing trend in the foundation movement. So certainly something that all of you, if you're looking for funding, should be thinking about if you have those impact activities built into your business model, which if you're here, I would assume that you do. I will say, however, that just kind of some of the technical differences. There are mission-related investments out of foundation endowments and program-related investments. It's kind of, it's technical terms. They don't really matter all that much except for like which bucket they're pulling the money from and maybe the risk they're willing to take. So program-related investments come out of that 5% of their impact-focused work. And so they're able to maybe do lower interest loans or not have the same return expectations or take a little higher risk. With mission-related investments, they tend to be a little more conservative because that's coming out of the 95% that the current paradigm says that they should earn market rate returns on that 95%. We may disagree with that current paradigm, but that's still how most foundations operate. So, but both of those are important buckets to choose from or to be able to access as entrepreneurs or as businesses that are looking to grow and need the capital to do so. I will say that as a foundation that can speak critically about our industry, foundations are, while looking to have impact, are notoriously conservative in their investments, frustratingly so. There is opportunity there, but it's not maybe as free-flowing as one might think yet. So there are frustrations that we often have with our partners who we're trying to bring into deals that we're looking at. There's room to grow for our side of things on that, but there's certainly good opportunity there and worth looking into.
Thanks. Tanya, the next question's for you. And I was surprised you didn't call out that audacious goal you have of helping 1,000 Black women start businesses. So kudos to that. Tanya, can you tell us a little bit about Mom Your Business, why you founded it, and the importance of the support you provide to women of color founders?
So I'll start with the back end of that question. The support is critical to the survival of women of color businesses because we're the fastest growing group of entrepreneurs, Black women are, yet we remain the least funded. So we receive less than 1% of all venture capital funding. So the support to ensure that women of color businesses are investment ready, and two, are scalable is critical to changing the paradigm shift of entrepreneurship and small businesses as a whole, right? So when we provide support with our capital access program since September of last year, we've helped our founders raise in excess of $250,000 in non-diluted capital. That gives them the platform to begin to grow and go even higher as long as they can measure that impact. And so that's the first thing. So the capital access part of it, and then providing them the technical assistance, providing the tools and the resources to be able to diversify the type of capital that they receive, also positions them to grow their business. 90% of women-led companies are single-led, right? 90%. And when you couple that with Black women who, in most instances, start a business out of a need, not because they have a great idea, not because they were left the business by their relative or family member, when you couple that with that and we start businesses with a need, the support of growing and scaling those businesses become even more critical to driving the economy, especially the local economy in the city of Philadelphia, where less than 2% of small businesses are Black owned.
Thanks, Tanya. John, the next question's for you. So we're going to move to the other end of the spectrum on investment now, where we're talking about equity investments and angel capital. So John, a lot of people may not know much about Investor Circle angel investing and what venture capital is when companies, and can you talk a little bit more about when companies should and should not consider it?
Yeah, sure, Scott. Always happy to talk about this subject. And it's gotten a lot easier since Shark Tank came on the air. I think people watch that for many years now, and they get the concept of investing for equity. But essentially, that's what Investor Circle is focused on, is providing other types of investments. Initially, for the first probably 12, 15 years of Investor Circle's lifespan, it was only about angel investing. So investing in startup companies and taking a piece of equity out of the company in return for that investment. And then trying to scale that company up rapidly to an exit, and then getting your return when the company is sold or acquired some way. Over the most recent years, we've shifted because we're looking at the problems that you have with that model. For one, that's very expensive capital. It's much more expensive than any kind of debt, or I think Kimberly's going to talk about grants and other types of capital. And so typically, because the risk is higher, because some of these companies fail, especially when you're pushing them to grow so rapidly, you need to be, your entire portfolio needs to have some companies that perform really well and provide a really large return to make up for the companies that that fail, where you lose your money. And generally, I talk to people about, first of all, how expensive it is. How can you grow your business without equity investors? Because if you can get it through debt or you can grow through revenue, that's obviously much cheaper, and you'll retain more ownership of your company. But it's really thinking about like a pie, right? So if you have a large piece of a pie, or maybe you own all of the pie because you're the single owner of the company, that's great. But if you want to share, grow that pie, and then have a smaller piece of that pie, that's what venture investing is about. You're hoping that pie grows much bigger, and so that your slice of that still continues to be larger than it would have been originally. I'd say over the last 5-6 years, impact investors have really started to take a look at that venture capital model and see what problems there are, especially when it comes to impact. So You can invest in companies that have a great social impact, and you can grow them, and then you can sell them in order to get your financial return. And then the acquirer could strip all of that impact out, and you could, unfortunately, not achieve your impact goals. Also, in some cases, that model can be extractive because you're taking sometimes a pretty large piece of that company. And so in a lot of cases, the investors might get returns, but the entrepreneurs, suffer if the company hasn't grown significantly. So there's a lot more, I think, exploring and opportunity around other types of investing models. So revenue-based financing that can still be patient and still, wait for the company to grow and succeed, but then gets paid out in a different way based on some kind of formula around revenue and profits. And I think one of the things that I find really interesting about the impact investing space and Investor Circle in general and the companies that we invest in is that, we're all trying to figure out how can we use capital to achieve our end goals, which is, using business as a force for good and growing those businesses, as successfully as we can.
Yeah, thanks, John. All right, Kimberly, you've had to navigate all this stuff. So why don't you talk a little bit about some of the strategies you've employed that help you find success in financing?
I think one of the things that I've been really consistent about investing in is developing team and identifying the places where there's some place where I can delegate how something can be done more efficiently or effectively than the way that I'm doing it. And in terms of funding that, I have been really diligent about, leveraging my networks. We all have networks, leveraging my networks to build that pool, and then to being able to think about what's the story that I'm going to tell, the truths I'm going to tell about how I've gone about deploying capital. And I think that as business owners, it's really important that we're able to figure out how do we explain the pivots that we make, how do we communicate the intentionality that we're taking in our decision making, and how are we really leading with a framework that suggests what our value add is and the spaces where we're taking up space. And I think that as you kind of fine tune that story, one of the things I've learned is that as you get better about telling the story, you get better about deciphering what are the things that are going to give you the kind of the biggest bang for your buck. And part of that is making sure that you are also diversifying where you're finding funding from. So that for me, that's meant going after the grants. There's a lot of Google search is not that challenging, though it is in time investment to figure out where is there free money on the table. Sometimes it means partnering with foundations. The UnTours Foundation is one of the foundations that I partnered with very early. They were actually the first foundation to come in and support the vision I have for Grant Boulevard. And one of the things I loved about them, which I think is also really important, is figuring out how do you offer a low interest loan, so that the psychological barriers to taking on debt are even perceived by BIPOC, business owners, all business owners, but particularly us, to be more attractive. And I think the other thing is, partnering with nonprofits like Women's Way, which is that, so these avenues, right? There's the open public forum grant, there's foundations, there's nonprofits, there are private investors. And I think one of the things that we should be thinking about is how do we diversify the pools we're becoming familiar with so that we can continue to raise the capital that we need to make decision and, well-informed decisions about what strategies that we're taking.
Great. Thanks, everyone. So let me see if there's any questions from the audience, or if not, I will go to my second round of questions. So does anybody have a question for any of our panelists? Please, go ahead.
John, you mentioned alternative investment models, revenue-based. Can you tell us a little bit more about that?
And can you repeat the question, please?
Yeah, the question is just to dig into a little bit more about alternative investment models. I'll say, I don't think this is new. I think this has been around for a long time in different, forms and with different levels of success. This is something that Investor Circle, has just kind of dug into over the last 5 or 6 years. There's other people that are doing this as well. And I think the concept is really finding some way to have some patience around the distribution of returns, which you don't typically have with debt. there's your interest accruing, or there's interest payments, or capital payments that have to be, principal payments that have to be made. And then also trying to figure out how can you align the interests of the investors and the entrepreneurs, so that the timing of the repayment of capital and return lines up and is works for both parties. And then also like the mechanism around that. So frequently it's done based on revenue, because that's typically the easiest thing to measure and kind of the hardest thing to manipulate. We've done some, I've seen some deals that use other kind of measures, other kind of metrics as well, like cash flow positive or something like that, to serve as a trigger, where the equity won't, no payments will be made until the company is cash flow positive. That can be a little tricky because, cash flow positive means like, a CEO takes an exorbitant salary and the company is not cash flow positive. So you can have some manipulation of some of those. But I think one of the key things that is really important around all of this is to have alignment with the entrepreneur and the investors. And I feel, especially if you're a company that has a social mission, finding the right investors that are committed to that as well is really important. I've seen a lot of examples of misalignment between venture capitalists and the CEOs, and it can cause a lot of problems. One other thing I would just add, it's not directly related to your question, but typically when you're getting investments from venture capital, I would say the money is not the primary objective. I would advise you to find, again, aligned investors, but also investors that are bringing other things to the table. So whether that's introductions to customers or contacts or somehow recruiting you to experts or bringing other resources to your company, that's really the value of your investor, not so much the money. So I would really work hard to find either people that have been in your space and exited, been successful, or somehow can add some other significant value to your company.
And maybe if I can just add one bit of commentary to your question as well about revenue-based financing. We've done 2 of those now at the UnTours Foundation, so we're just beginning to play with that as well. But what you'll typically find is, revenue-based financing is great in that it lives in the middle between equity, which is expensive, in which you're giving up control at some level over your business, and debt, which is really rigid, but you pay for that. So the returns for the investor tends to be higher on revenue-based financing than maybe traditional debt. And it's also often used in situations that are closer to equity, like where you would maybe be seeking an equity investor, but instead you're doing revenue-based financing. And so tend to be higher, you don't put an interest rate on it, you put like a fee attached on that you pay at the end. But if you were to look at it like an interest rate, you would, the expectation is higher typically. We're trying to look at it in a slightly different way as like a replacement for debt, just a more flexible type of debt. And so, but we're rare because of our kind of extreme impact focus and how we invest. Most revenue-based investors are looking at it more as like an equity replacement, and therefore looking for those higher returns. And they're taking more risk as well, so there's some justification.
Yep. Other questions, please? They should turn it on.
Okay.
There you go.
Yeah, they did. Kimberly, question for you. You mentioned the UnTours investment in you. I'm curious how you connected to UnTours, and then John was just talking about trust. So what made you trust and be willing to partner with them?
That's a good question. I was introduced, I know. Women's Way, nonprofit in the city. I reached out to a woman who I'd heard that her leadership was one that I admired. I admired I admired her thought leadership. I admired the history of the choices that she made. And I asked her to coffee. And over that coffee, she said, she's very generous with her time. She said, I think that there's a foundation that you should probably connect with. And so she connected me with who used to be the director of the UnTours Foundation. And when I met with that woman, white identifying woman, she said to me that she was the first person to use the term decolonizing wealth. And because she was so, I mean, we were values aligned, but it was the crispness of which she understood what needed to happen for real progress to be achieved that made me trust her. So it wasn't that I wasn't necessarily pitching her to anything, and she wasn't pitching me to anything. She was very clear in her values, and that's what it was. And you know, someone says this guy's Corey Donovan. He's not here, so I'm just going to tell you it's Corey who says it. He says that, this is where I got it from, that progress moves at the speed of trust. And because she presented in a way that showed me that she understood progress, I had a sense that I could trust her. And then when and I saw the body of their work. So I just think part of that is this is to John's point, it's really incumbent upon us to do our own due diligence about who we are taking money from before we even decide what the deal is. And then when we don't do that, that's when we end up in short or long-term marriages that are doomed to fail. So.
Yeah, but I'll just add also, you know, I was in angel investing since 2005 with another group, Robin Hood Ventures. It's more traditional angel group here in Philadelphia. And great group of people, you know, successful business people that are now angel investors, really doing a lot of things to support the angel community, the early stage venture community here in Philadelphia. But then when I got more involved in Investor Circle and you know, kind of really truly committed to impact investing, like my whole world changed. Just like everybody that I interacted with, you know, all these people on the stage, all these people in this audience, you know, just generally good human beings. And I found that negotiating and doing business and everything else, like really, my experience just changed. It was just really, you know, a powerful kind of turning point in my life. And, you know, sometimes I just talk about, like, I don't deal with any assholes anymore. And excuse my language, but it's been really compelling, and I appreciate everybody in this room that's part of that community and you know, in large part for that reason.
Excellent. Other questions, please?
After 2020, a lot of companies have made the declaration and have also made commitments to invest and work with Black and brown entrepreneurs. And it's really brought up a hype, but recently there's been a report from Crunchbase saying that it has not surpassed 2% of the billions of dollars in capital investment. What are the issues that you're seeing that is not changing the narrative in investing in culturally specific programming and investments?
I'll take that one.
I got a thought too.
I think there are a few things. I think there's a misunderstanding of the need of Black women when it comes to entrepreneurship. And I'll be just totally frank with you all. If I could count the number of times that we've been offered capital, not just for our organization, but for our founders, that was always attached to mentorship, because they didn't think we were capable of applying and using that capital correctly. That's part of the problem, right? It's always, well, we'll give it to you if our experts, if this, and I'm not saying that that's not needed, but what I'm saying is that when it's always attached to something, it speaks to the fact that you don't understand culturally what it is that Black women need in order to grow. And so that is the main thing when we talk about democratizing capital. And I think the other part of that is that we need more VCs, angels that look like me and Kim. That is the other part of that. And so we saw that recently, and we saw an uptick in investment. And then in the last 6 months, we saw in the last quarter of this year, we saw that go back down. And so we have to, as VCs, as investors of color, which is why we've partnered with Women's Way and Zenith Wealth Partners in our own fund, is to be able to create that pathway, that gateway to capital, where folks are seeing people that are investing in them that look more like them.
And my thought, yes to so much of that. And I think what it speaks to is a larger culture, dominant cultural thinking that black folk, BIPOC folk, women are not capable of being savvy in terms of business strategy. Yep. And so I think that default presumption, what it results in is that we get less access to capital, which means we're more actually set up to fail. Yep. And so then you put me in a room with a white man that didn't have to prove as much as I did to show what his idea, his conceptual thought was, or what his proof of concept is. You gave me less access to a resource, and you held me to the same standard in terms of the aggressive, timeline around when I was going to demonstrate a return. When from the very beginning, essentially the way that the whole deal rolled out set me up to never be able to keep up with him. And so I think that until there's a real sense of like hands off, I trust BIPOC black women to make sound decisions. I'm not going to micromanage what you do, though I will provide support when you ask for it. I will happily trust my contacts and make a warm introduction and know that you will manage those relationships. And I will give you hold you to the same standard in terms of what the framework is for how the deal goes down, and then give you the same timelines to execute. Then we'll get greater equity. To tell a story, there was one example of a company that went out to raise $5 million. That they told me this. The guys who got this money told me this. They went out and they asked for $5 million. They were given 12, and they never produced a slide deck. They never showed any projections, right? And I think that one story in my own business experience is probably pretty indicative of what the framework has been, which is that the standard has just been so unequal that it keeps money in certain hands and it keeps it out of other hands. And then we never really have a chance to do what so many white male companies are able to do, which is actually to fail and recover, because that's what business success requires, right? And so, if I show you this is what I've done and what I've done doesn't match up, it's really so important that investors begin to see the wider context around what we're facing and really give us the leeway to make mistakes and to learn and to grow in the same ways that oftentimes the folks who maintain the purses have been able to.
Absolutely. Yep.
Okay. Can I just weigh in there too? Because I agree with all of that. I think it's really important to change the standard and make sure that the outcomes that are required, to be successful or to be judged as successful, or the opportunity to fail and still learn from those mistakes and actually be a better entrepreneur for that and raise money. I think all of that stuff needs to change. I think one of the things that we've done in the industry has to do a better job of is look at the systemic issues that are embedded in the way capital flows. So especially in the venture community, it's a lot about networks. It's about being connected, and part of that is for good reasons, because there are tons of entrepreneurs out there. Some of them are good and some of them are not. So you rely on your networks to screen those entrepreneurs for you. You rely on those networks to know specifically what do I as an angel investor look for? What market sectors am I after? What stage am I after? And they screen that. And I know that if I get a call from this person, that they really send me good entrepreneurs. So I'm gonna take that call. I'm gonna follow up on that email. I'm gonna connect with that entrepreneur. And we look at those networks, and if they're all white, then you're more likely to get, and if they're not connected to certain groups of people, then you're not going to get entrepreneurs from those groups of people. So I think that is really an important part to think about, like how do we make those connections, and how do we build those bridges and create those pathways. And I'll say, the other thing is about, we talked a little bit about mentorship, but some of it is about like how do you connect those young entrepreneurs with the mentors and the connections so that they have a path to grow. A couple of my portfolio companies are sons of successful entrepreneurs, right? And their fathers, and in both cases it's males, but their fathers were very successful with multiple businesses, and now they're leading their sons through that same pathway. And so, if you don't have that as much coming from certain populations, then like you have to figure out like how do we get that, right? How do we have those young entrepreneurs that either have family members or other connections that can guide them through that pathway as well?
And that's about meaningful integration, right? Which is another thing that I think locks so many Black, brown entrepreneurs out of access, is that our networks oftentimes are the places where we get exposures. And if your networks are not meaningfully diverse and meaningfully inclusive, then that is another barrier. You need someone to say, I'm gonna go out to coffee for you, and I'm gonna get a sense of who you are, and I'm gonna use my own acumen to decide how safe this is, and then I'm gonna figure out who in my network I'm happy to pass you along to for where I assess is the next thing you need on your journey. And we think about all of the ways in which we think about capital, and social capital is another thing that BIPOC business owners need help and support in figuring out how to navigate things and how to get it, and then so they can be leveraged over and over again.
Excellent, thanks. I'm gonna ask Jamie a question because I know we kind of have missed sort of the CDFI side of things, and so I was wondering if maybe you could explain a little bit about what CDFIs are and what's their purpose.
Yeah, absolutely. So community development financial institutions were created in the 90s as a way to invest in urban and rural low-income communities for entrepreneurs that weren't able to access capital from traditional financial institutions. So CDFIs have gotten, I think, a lot more popular since the pandemic, since they were some of the first responders to helping small businesses achieve access to capital, whether it was loans or even grants at certain points. So CDFIs are also a great opportunity to think about how do you invest in your business that doesn't always require giving up equity, doesn't always require putting a lien against your home. But how do I get access to affordable capital that helps me start or scale my business in a way that allows me to still maintain ownership and control at the same time, not break the bank. No pun intended. Yeah, so CDFIs are definitely a tool that entrepreneurs should look into. They're also are doing, they're lending through a lens of equity as well for the most part. So one of the things that I found just quite magical, quite honestly, I mentioned the impact loan coming from the banking world that is super conservative, very strict products that you basically sell to small business owners. The impact loan was an opportunity to be innovative in a new way. So one of the things that I think the industry has to do is think about to truly reach equitable access to capital, not just access, but what does equitable access look like? It means creating new tools that don't exist. We can't expect to use the same traditional tools and think that it's going to continue to work and produce different outcomes. So one of the things that will be another pilot product that we'll be doing in January actually came from an initiative through the Philadelphia Federal Reserve. We had a cohort in Lancaster, PA, where a bunch of resource providers, BIPOC business owners were a part of this cohort to develop a strategic plan around a pandemic recovery plan for BIPOC small business owners through the lens of racial justice. And the number one need that entrepreneurs are saying, access to capital, particularly equitable access to capital. So we'll be piloting a microloan in January that is a loan grant hybrid. So up to $10,000 for businesses that were either established before the pandemic or even started during the pandemic, since many BIPOC entrepreneurs went out and started businesses, as you mentioned, out of necessity during the pandemic. So how do we help them through the recovery process? So this loan, once 70% is paid back, the remaining 30% will be triggered and forgiven as a grant for the entrepreneur. Also, inflation, super high. So this was one of those shower thoughts that you're thinking everyone's pressuring you as a CDFI to think traditionally and say, well, you got to raise your interest rates. Inflation is high. For small businesses, it's more expensive to access capital or to borrow money. It's more expensive for employees. Everything's going up. So it was just like, well, what if we swang the other way? What if we did it completely different? So this specific loan product will actually be offered at a fixed interest rate of 1%. Wow. So that's an opportunity to give a tool that's what equity looks like. Like, that's equitable access to capital in a way that's just like no bank's going to do that. But if we're truly going to expect BIPOC entrepreneurs to be successful, we need to give them tools that they can run with and that they're going to be able to use to be successful.
Thanks. Please.
So my whoever wants to answer. Like, we're all here getting this information, but as Kim said, I got 50 homies who probably could have used this information as well. So when we talk about like our network and our social capital, is there a place or is there a space created besides Google where someone could find all of your information in one space, gather information, vet you all, see if there's an alignment? Because for me, as someone who has a nonprofit and someone who has, I guess, a social impact LLC, I do a lot of stuff where people deem my work as something the city should be doing. So where do someone who's doing the same work as I do find money, but then I might have a way in, but don't have connection to somebody else, but they need a way into? Like, is there a space where people who are not in this room, who are not in this city, who are not in this country maybe, can go to and be like, here's a viable space created of wealth of knowledge, a pot of gold at the end of the rainbow where I can have access into all of you without being at B Corp or knowing someone at B Corp or walking past Slo's Hotel and seeing the banner outside or something like that?
I'm gonna say maybe. I'm not going to say yes or no because all of us in one way or another are connected to the social venture circle. And so, you know, we've been a benefactor of support from the social venture circle financially. I know UnTours, as well as, you know, all of us are connected to the social venture circle in some way. So I would say maybe, and then I'm going to defer to Scott or John to possibly answer the remaining part of that.
Yeah, and Social Venture Circle has rebranded back to Investor Circle, just to be clear, but it is still the same organization, and it is a resource now that it's merged into ASBN. It is a resource for investors and information about this. I'll say also, living in Philadelphia, if you are in Philadelphia, Impact PHL is serving as that role of kind of the front door for the impact space, both on the capital side and the business side. And Kimberly mentioned Corey Donovan is the executive director, and he's focused on trying to accelerate all of this activity and get information and education out to whoever needs it.
Yeah, and I'll add to that is that in the work we did for this conference, we kind of leveraged the B-Lab funding to start to map that ecosystem. So you'll see there's a graphic out there that talks about it, but it's got more work to do to kind of map just the local ecosystem. And that's going to be the property of Impact PHL going forward, to kind of manage that and think about how we work better together as impact organizations for investments in the city. And I do want to add as well that there is, because you asked about national, so ASBN Investor Circle is national. We have the most equity investors here in that whole network, but it's also local, right? It's like everything is local in the end, right? So your CFI programs and lenders are going to be local. So every city is going to have its own sort of ecosystem. And one of the challenges we've seen here is having one of the biggest ecosystems of impact investing, is that it's hard for anybody to know the whole system, right, and know where to go. And so that's one of the reasons we took advantage here to kind of bring this system together. You want to talk about second agendas? Getting all these guys to know each other better is one of my agendas here, right? Because the more we all know each other and the more we all talk together, then the more we're going to be able to help people wherever they hit the system to find the right place. So it's a work in progress, but there's a local and national piece to think about here.
Just two answers to that, actually, because I think Lancaster has a good example that that can help solve this. So local communities, I think, need to do a better job of how do resource providers collaborate with each other to map out that ecosystem. So Jonathan Coleman actually was in my position at Assets a few years ago, and actually was one of the folks that helped start an entrepreneurship coalition in Lancaster County. And what this was a network of resource providers that would meet regularly to map out the ecosystem, but then also what programs and services are we offering, how do we not overlap with each other, and how do we collaborate better. And while I sat on the finance committee, one of the things that we developed was one uniform application for entrepreneurs. If they went on this website, they apply one place, and this would get sent out to the resource providers that were doing lending. And then between us, we can help determine, is this person need a microloan? Do they need a commercial mortgage? What do they need so we could direct them to the right place that was a lot more streamlined? So that's one way. The other way is resource providers have to go knock on doors. So I think we have a responsibility of going out to the community, because I think too many times resource providers expect to come to you. Exactly. We have a website. Well, why isn't no one? Why aren't people visiting the website? Apply there, and it's just like no. It's it's like politics, right? You knock on doors. You got to canvass. You got to meet the people where they're at. You need to have conversations with them, and to build trust, you have to have that face-to-face conversation, so that way you can say, okay, I trust you, Jamie. Now, what do you have to offer? How can you help me, right? So I think those are two ways that we can do a lot better with that.
And I do think that while, people have, we have to figure out how we're going to go after what we need. I think the other thing that we should be encouraging people to do is to be more thoughtful about who they're pursuing. You should talk to the local business owner that's, in your neighborhood, or that's in a neighborhood that you visit, and build a relationship with them. And I think that that's another way that you can kind of circumvent the non-existence of a singular kind of pathway.
Yeah. And I do want to add that there's another side to this, and one of them is sitting right here, Tanya, right? I mean, she's connected in her community in a big way, and she understands our network. And so just by having your Mom Your Business organization, you were able to kind of connect people to the places that can provide that capital, right? So it's also that navigation from those communities that's going to help as well. So there's a whole group of things that really we can do, and we all need to do better at it. So other questions? We have about 14 minutes left.
Right here.
Okay.
Thanks so much for this conversation. My name is Twana Harris, and I'm based out in Atlanta, Georgia. I think a lot of times people assume because we have a larger, diverse population that we have more resources to support. And I will say that I know that you guys realize you're not where you need to be. You're a hell of a lot farther than we are, especially when it comes to impact investing. There are tons of companies that have close proximity to the problems that they're solving. They're building amazing companies that have revenue out the wazoo, but are just really struggling with getting impact investment, just simply because we don't know where to find it. So are there resources nationally, even if there's something in Philly that has a more national coverage, are there resources nationally? Are there websites? Are there books? What resources would you guide someone to really understand where this community of impact investors that are truly concerned about making the world a better place, where we can find them?
John?
Yeah, I can weigh in that. I mean, I think one of the interesting things is like thinking about impact and how you can use impact for your business, right? I generally break it down into 3 different categories. I think there's opportunities for companies to leverage their impact around recruiting and retaining employees, around creating goodwill, PR, connecting with the community, and just generally putting their message out there. And then the last thing is capital. And I think it's really important for companies to be able to articulate what their impact is. We have a company here locally called Impactable X that we've been working with for a long time, that has a process that they can work through with startup companies and help them really identify what is the impact, like identify a KPI, just one KPI. Maybe you need 2, but I would really keep it simple. Figure out what it is that drives the impact around your business, and then figure out how do you articulate that? Like, how do you have the data and the information behind that, that makes that compelling? And then find the people or the organizations that care about that impact. So you could be solving a problem that somebody else is really, interested in solving. And if you can do that, again, if you can articulate that, again, for employees, I've seen examples where employees have worked for free when the company hits a downturn. We know that the B Corp community is more resilient in economic cycles. There's a lot of evidence that shows when people really believe in what the company is doing, that it's a better resource for the company. We all see PR. You can get connected to customers. You won't necessarily win that business. You have to compete on price and quality and everything else like any other business. But you can access them, I think, in a different way. And then capital, like we have some really cool examples of capital access that if you're solving a social problem that capital provider cares about, you know, you can get better terms and better access. So I think it really is about figuring out what your impact is, being articulate about it, and finding, if we're talking specifically about capital, either high net worth individuals, family offices, angel investors, other capital sources that are interested in that social issue.
Yeah.
So what he's saying is like, it's not that that network already exists. It's like figuring out how do you identify in your area who are the people who already have demonstrated through what they're investing in or the causes that they get behind that they might be interested in doing some impact investing. You know, it's not like there's like in Atlanta there'll be this that we know about, that there'll be this place, but there may be these other markers that you can put your search together with them, like, and lead with. Yeah.
I was just going to add to that. It's a hustle. Kimberly's had to hustle to get her funding that she's had. And Jamie said, you know,
Still hustling.
The impact-focused investors. The impact-focused investors or the equity-focused investors should be more out in the street, should be beating the pavement, but that's also hard, and that takes time on our end as well. And the reality is, like, as someone who's seeking funding, you're probably going to have to initiate, and you're going to have to go find those funders and be comfortable networking. And so, you know, you found your way to UnTours Foundation through one or two connections removed before eventually you found someone who would come along and provide some financial support. So there is a responsibility for the funders to be more accessible, to be more organized, so that it's easier for you all to find the funding. But there is also a responsibility of those that are seeking funding to just to get out there and you know, and hustle and try to make those connections that lead to connections that lead to connections that lead to the funding.
Yeah, and if I could just kind of give some specifics to answer your question. So Investor Circle, which we're a part of here in Philadelphia, is a national organization. It's a part of ASBN. So if you're looking for angel capital online, and you can apply anywhere in the country, and then it's a traditional screening process. But the other thing about doing that is that I've worked with investors in Investor Circle all over the country. They're well connected in their part of the country. So if they're not the right ones, they might know how to steer you to the right ones. So that's a good national network. It's primarily focused on equity. Additionally, CDFIs have a lot of flexibility in how they run their programs, and I guarantee there are CDFIs in Atlanta. So understanding how each of them run their programs and what they're focused on is accessible capital for startup.
I just want to make one last comment because it piggybacks off of what she said before. I'm specifically talking about culturally relevant companies. Yeah. And there is a huge disconnect between the investment community and culturally relevant companies, and the support that is driven off of them. Typically, if you can get the support from corporations or somewhere else, then they'll come along. But it's a tooling process of,
yeah, it's hard.
To give up.
Yeah. Yeah, and I think, you know, when we look at our investment community, that's one of the goals we have as well, is to diversify the group of investors so that we have more people that understand and have come from the communities of the businesses that need the financing, right? And that's a hard thing on the investment side as well as on the community side, so yeah.
And in fuller disclosure, while I've been successful with CFDIs and with nonprofits and foundations, I have not yet found like that rhythm yet with the angel investment community. So circle back to me at the end of the first quarter, and I'm gonna let you know how it goes when we go off for this first seed raise, right? So it's easy for us, you know, to talk about these things in theory, right? And it's interesting to even continue to test the temperature. But, you know, you'd be surprised the number of people who I've reached out to in direct connects from LinkedIn, because I knew that what they did or who they were associated with or what company they work for, and you know, I've asked many people out for a cup of coffee to get a sense for a temperature check on what they care about and how that shows up in the work that they do. So you know, it is a hustle. It's a real serious hustle, but I think it's a really worthwhile investment of the other capital that we have, which is our time.
Come on. So okay, so we have about 6 more minutes. So So let me go over blue shirt here first, and then we'll come here, and then we'll go. Oh, you already have the microphone. So all right.
Want microphone check? So I just want to sort of piggyback off what Kim was saying earlier, and my name is Taylor. I'm on the investment committee for the Decarceration Fund, and actually it's 3 of us that are of color that's on this forum, and we're all system impacted. So we have an understanding of what you're going through. I want to say that first. I want to tell you a story about a guy that once called us, you know, that went through all the bills, checked all the boxes, all the bells and whistles, and the very first thing he wanted us to know, because it's only 3 of us of color, but it's some other white people on this board as well. He wanted us to know that he wasn't coming to see if he fitted us. He was making sure we fitted him. And what you said about that shows that you're all about purpose over profit, and that you're serious about protecting your brand and not just taking money for anybody. So I just wanted to highlight that component of it. Well done.
Great. Okay, you have a microphone, so you go first, and then we'll get the microphone.
Microphone check, nice. Thank you all for the wisdom. It's been incredibly life-giving. I work at a B Corp right now and hope to start one day myself, and I'm kind of in the design phase, and it's in my head at this point. So I'm curious for myself and for anybody in this room who's interested in starting something at some point of our own. As we start the design process, or thinking about what that org is going to be, how might we think about the financing of that company from the ground up so that we're doing it in a way that's sustainably scalable?
I guess I'll speak because, yeah, I guess I will.
That's great.
I think that there isn't one right way. I think that the way that, I'll tell you from what I began with, the first people that I got to invest in my vision were people who I already knew. And even though they didn't know that I knew anything about fashion, because I really didn't, I knew I had a vision for a company and that I wanted to put together a team that could execute that vision, I asked them to trust me with their hard-earned dollars. And then once they told me, they gave me the money, I did a traditional crowd fund, and I said, when you give me this capital, I'm gonna use it to invest in a studio space. And I delivered on that promise. So I think it's a matter of you get a little bit of startup capital, you develop your business plan. One of the first people I hired was a graphic designer. I think the way that we tell stories is really important to getting people to understand what we have in our minds when they can't see what's living there. And then I leveraged that to say, I'm going to deliver on what I told you I was going to do. And I did that over and over and over again. And so whether it was taking out a loan from a foundation or taking out a loan from a CFDI, it's always been my team and I trying to figure out how do we show that we are going to do what we said we were going to do. And that's just that's task commitment. That's discipline, that's just dedication, that's pressing, repeat, that's rinsing, that's washing, that's running at the play again. And so, there was one woman, we did this, and this older woman, she reached in her purse. She reached in her bra, same difference.
Her purse.
Her purse. She reached in her purse, and she handed me $20 cash, right? And so I think this idea that there aren't people in our network who can help us get that initial $10,000, $15,000 that can help us to build out the kind of the general foundation for the world that we're going to be building. I wouldn't underestimate that. And then you start there, and if it's 5,000, you tell these people, this is what I'm gonna do with 5,000, you deliver on it. And then you go back and you say, I did what I said I was gonna do, now I need you to come and trust me again because I need to do this other thing. And so, and I think that even CFDIs and the foundations, maybe less for grants, they need to see that you are executing on a vision in a way that there can be some performance indicators that say that you're kind of going for it. And so that's what I think is it's not necessarily the cleanest advice, but I'm trying to tell you it's a way.
Yeah, absolutely. I just want to echo what Kim said about kind of diversifying how you raise your capital. We had one of our founders who needed just $5K to get her first bakery doors open. So we sent her to Kiva, which was an easy, shortcut way. Kiva is a no interest loan, kiva.org, and she was able to get that $5K right within her own community first before she even had to go and borrow anything on a grander scale. So not taking for granted those that are right within your immediate network is an easy indicator of how you can build right from where you are.
And that's what it means to build a campaign, right? Essentially you'll be running a campaign. And I will also say, everyone doesn't know this because I think they see how much I was able to do, that my team and I were able to do these last 5 years. They don't know that I didn't resign from my full-time teaching job until August of this year. So this entire time that I've going through the B Corp application process, moving into our first studio space, opening our first brick and mortar, I was working full time so that I could invest in the company, so that I could I didn't need the company to feed me. And I think sometimes I think entrepreneurs, they're so aggressive about that early launch that they actually kind of starve themselves because they make their business too soon. They start trying to feed themselves off of their business. And so it's not easy. But I will say that it made my life easier in the aggregate that I kept a job. So that's just another thing that I would...
Okay, guys, we're going to have to cut it there. We have about 500 people coming through the door in about 5 minutes. So thank you all so much. And for those of you that are going to be at Macon North tonight, you can continue this conversation because everybody here will be there. And the organizations besides Kimberly's will have a sign in the room next to the main room where you can continue this conversation. We will also have our Sustainable Business Network there. We can talk about the impact tax credit that we get here in Philadelphia. We will also have some of the other organizations, as John talked about, Impact PHL. So we will have these people there to talk more at Macon North, so I encourage you to come and join us and talk more. Thank you.